Hey, what's up guys? Andrew McGuire here. Today we're gonna talk about investing the state of Phoenix in residential real estate here in mid-2024. Maybe you're an investor from another state and the landlord laws have changed and they're unfriendly, you have to deal with squatters. Or maybe you're in the Midwest and you're cash flowing properties, but you're like, I don't know. Every time a roof goes bad or I have to make a big repair, I lose all my cash flow. I would rather invest in a state where appreciation is through the roof, no less Arizona. So we're gonna talk about today, does it still make sense to invest in Arizona? We're gonna go through the top 5 reasons why investing here in 2024 has gotten really hard. And if you stick around to the end, I'm also gonna talk about a couple strategies that I'm using to buy cash flowing real estate here in Phoenix, even here in 2024. So stick around to the end and we'll talk about that then. So let's get right into it. The top 5 reasons why investing in 2024 has become extremely difficult. Number 5 reason, insurance costs and tax costs. You think when you take out a mortgage, a 30-year or a 15-year, you're locking in your price, your PITI, and then all of a sudden you get jacked with a new insurance premium, your premium goes up $200, and then there goes 200 of your cash flow that's already small to begin with. So that's made it harder. We've seen insurance costs go up almost 27% in the last 3 years from 2021 to 2024 here in Phoenix for residential real estate. So every single cost that adds, that takes a little bit less cash flow and makes it a little more difficult to invest in residential real estate. All right, on to reason number 4, regulations. There was a huge Airbnb scramble throughout the entire country, but Phoenix was one of the most popular places to do a short-term rental and midterm rental over the last few years. And it got a little saturated, and that started having the cities come out and say, hey, we want our money too. You're setting up, some of the neighbors don't like it. We're actually gonna come out with regulations to get our piece as well. So that's become tougher. Just recently, this has never happened to me, but I got several Airbnbs across Chandler, Gilbert, and Mesa. Most of the Airbnbs in Mesa and Gilbert, recently I got letters that there was a couple that I was unregistered. Now, it wasn't a big issue. It's fairly easy to do and it's not that expensive, but still, you know, a couple $100 and a few hours to go through getting your Airbnb registered is just one more reason that makes it more difficult to invest. On to the number 3 reason. I hinted at this in reason number 4. Reason number 3 is it's getting highly saturated. Back in 2021, during the rush, there was 7,500 single-family home Airbnbs in Arizona, in the Phoenix metro that is. We look at today, we fast forward to 2024, and there's 9,500 Airbnbs, and that's actually down from 10,000 in 2023. So what you've seen is people continue to try to buy Airbnbs to get them to cash flow, realizing that it's not all it's cracked up to be. And there's so many Airbnbs in their market, whether it's Scottsdale or Gilbert or Arcadia, some of the more popular areas, that there's just an Airbnb nearly every other house, which makes your occupancy and the rates you can charge on a daily basis go down. So we've started to see a little bit of a sell-off. As I mentioned, there was 10,000 Airbnbs in Phoenix, and today there's 9,500. This is according to AirDNA when I ran my data last. So it's been oversaturated in the short-term rental market. Now, you just have to run your numbers tight and make sure you're getting a property in a worst-case scenario that property is paying for itself. If not, potentially look at a long-term rental. So there's ways around this, but that's part of the issue. Until more sell-off or the demand increases, we're gonna have a problem with oversaturation of the short-term rental market. Now we're down the list. We're here to number 2, and this one's an absolute killer. Interest rates. For every 1% interest rate hike, that makes 10% more payment on your PITI, on your all-in mortgage. Now think about that. Properties, even on the good Airbnbs, were only cash flowing maybe 20 to 30% when they were bought in 2019 or 2020 at interest rates of 4%. You fast forward today where interest rates are 7% or higher for investment properties, that's a 30% increase in the cost of your payments every single month. That's before all the other costs. So that's directly responsible with interest rates. Now, the good news is interest rates fluctuate. There's a lot of speculation that they're gonna start to decline after the election this year into 2025, and we might see rates back in the 5s. I actually just locked in one of my buyers at 5.75% here in August of 2024. So there has been a little decrease and some relief there. And the good news is, if you bought and you're able to break even at a 7% interest rate, you're definitely gonna cash flow when rates go back down to 6, 5, or 4, and you're able to refinance. But as of right now, interest rates are one of the biggest issues out there because they're so high. And I don't wanna hear talk about interest rates were 16% when I was buying my first house. Well, I applaud you through going through that era where interest rates were 16%, but you didn't have to face problem number one, which we're gonna talk about next, the number one reason why it's making rental property investing here in Phoenix in 2024 nearly impossible. All right, and that leads us to number one. Prices are at an all-time high. I ran my data for July of 2024, and it eclipsed the record previous high all-time in prices, which were June of 2022. So we're at an all-time high right now. When you combine that with problem number two on the list, high interest rates, it creates an unaffordability problem. So I don't say do not invest, because my belief is that when interest rates go down, prices will skyrocket. And when that happens, I would rather own 30 homes than one home, or worse yet, no homes. But just to get into a house today, really unaffordable. Prices are a big factor in that, especially combining with all the other issues I talked about, and definitely interest rates. Now that you've stuck around to the end, I appreciate it, and I want to give you a little reward. I bought 3 properties here the last few months, and this is a strategy that's becoming very popular, but people still are not using enough. And that's buying seller finance properties. I bought 3 of them in the last couple months here. What I do is wait for canceled and expired listings. I pick out the very best ones that I like. I call those sellers directly and talk to them about potentially selling creative finance. And that's how I've been able to buy 3 properties. And I'm buying these properties. The first one was at 2.9% interest rate. The next 2 were in 3% range. All of them cash flow as a long-term rental. Not that I'm gonna keep them as a long-term rental. I just do that as a backup plan to actually have the property in case a short-term rental continues to get regulated or too oversaturated, that always can pivot back to a long-term rental. So my goal right now is to buy these properties that have low interest rates. That means the principal pay down is really high every single month, as well as prices I believe are gonna appreciate. You put those all together, a little bit of cash flow, huge principal pay down, appreciation. At the same time, I'm in real estate full time, so I need the tax write-ups. When you put all of those together, that's combined a strategy that I'm following that I believe is going to build a lot of wealth. Because again, I've got 13 properties today. My goal is to get to 30. Let the market do its thing. Even if those properties go up $100,000 in value over the next 5 years, let's just be conservative. That's $3 million that I'm going to make if I own 30 properties. So that's a conservative number. If you owned an average house here in Arizona in 2019 to 2022, you basically doubled in value of your property. If your house was worth 250, you made about 250 on that. It's now worth about 500,000 today. So think if you just had 10 houses and you sat on them from 2019 to 2022, that made you $2.5 million in net worth, which most people can probably retire on. So don't give up yet. This time is just a little bit different. This is not my strategy forever. When interest rates go back down, and we'll see what happens with rents and saturation, I will pivot back to more traditional strategies where I'm looking for a single family house that has a casita. Maybe I can make it a duplex. Maybe I could do some sort of room by room rental. Those are all strategies I've used that really work well when the times are right, but with the unaffordability, it just makes it a little bit harder today. As I mentioned, I'm a real estate agent and investor here in the Phoenix metro market. If you would like to chat with me about a strategy, look for a property or sell a property, you can contact me. My contact will be in the description below. And for more videos on investing, buying and selling, and overall about the Phoenix market, subscribe, and I'll see you on the next video.